Welcome back to Real Estate 101. I'm your host, Joe Terceira, and today we're going to talk a little bit about refinancing, and I'm pleased to be joined once again by Eva Zaba of Centum Way to Save. Eva, welcome back to the show.
Thank you for having me.
So tell me, Eva, what exactly is refinancing?
Well, when we own a property and we have a mortgage on that property, refinancing is closing that mortgage and opening basically the new one. So we breaking the old one, we breaking the old mortgage, and we pulling up the equity from the house, and we opening a new mortgage.
Okay, now when you say you're breaking the old mortgage, what exactly does that mean?
That means we discharge the mortgage and we register a new mortgage.
You register a new mortgage. Okay, so when is a good time to refinance?
Well, any time is a good time to refinance, but there are ways, then there are better times and not the best time for the client to refinance. When the mortgage is up for a renewal, this is the best time for the client to refinance, because if the client signed a contract, let's say for 5 years with the bank, and we still got 4 more years on to go on that loan, then the client will end up paying the penalty. So when the mortgage is up to for renewal, this is the cheapest way to go.
So just before?
Just before, yes.
Right. And are there any added costs when you refinance?
Absolutely, because we are breaking the old one, so there's a discharge, and this is you have to pay that to the old lending institution, and then we are opening a new, register a new mortgage, and this is done by an attorney, so this is another cost.
Right.
There may be a lender's fee, and there may be a appraisal done.
Appraisal fee, right. Okay, can you, when someone is going through the refinance process, can they refinance part of their debt or any of their debt?
This is exactly what we're doing. We're taking their first mortgage and we adding up some extra cost for the to that first mortgage, so we can pay up the credit cards, we pay up the car loans,
lines of credit,
personal loans, but that's not only. We can pull up some money for a construction if they want to put up a brand new kitchen in the house and they need 30,000 for it. Yeah. Yes, finish the basement, or if the wedding's coming up and they need to have finance that. So there's a lot of reasons why people refinance the property. So so yes, all the debts and all the obligation we're putting under one roof.
Okay, and can property tax be included when you refinance?
Well, most of the banks like to have good clients when they pay up their taxes. So most of the times we need to prove it. Then the taxes are up to date, and the income tax is up to date.
Okay. So here's a good question for you. Let's say someone bought a house 4 years ago or 5 years ago, and they're coming up for renewal, and they need to be refinanced. Do they have to qualify to be refinanced?
Yes, absolutely. They have to qualify to refinance, just like they qualify first time when they were purchasing
when they did the mortgage.
Yes.
Right. And what kind of documents do you need for refinancing?
Basically the same documents that they needed 4 years ago. So starting with the driver license, with some ID with the picture, then proof of income. If they are self-employed, then we need to have a proof of business, income of the business. Or if they have a regular job, pay stubs and jobs letters. So, so basically the same documentation will need it
as they originally used.
Yes.
Okay. Is an appraisal always done when there's a refinance on a home?
No, but most of the times there is an appraisal done, and the client has to pay for it before we when the client is qualifying for it, we're sending documents to the bank, and then the banks give us the list of the appraisals. And we pull up the appraisal from that list, because every bank got the different list of the appraisals. Yes.
Right.
So the client shouldn't go and just hand me over the appraisal. Oh, I have it done 3 weeks ago. That's not how it works. It's done by the
lenders.
It's done by the company who is associated with a particular bank.
Right. Okay. So someone's going through a refinance process. How do they know how much equity they can pull out of their home?
Well, that depends on the lenders. Some lenders will allow you up to 80%, and we still got lenders would allow you to pull up to 85% of the value of the home.
Okay. So Eva, tell me, just explain a little bit to our viewers, what is amortization and how does that work?
Well, when we refinance the property, we can use the amortization of 30 years, 25 years, or 10 years. It depends what the client's needs. So with the refinancing, we start all over the new process of mortgage, and in that time we can do a lot of things with the mortgage. So if the clients require lower payments, then we'll extend the amortization for them. If they can afford to have a little bigger payments and they want to have a shorter time to pay up the mortgage, we can shorten the time of the amortization.
Okay. So for today's final question, how are the interest rates in comparison to when someone initially does their mortgage?
You see, we go to the same bank, so we just pull up more money from the house. We package the deal and we send the deal to the lender. So we got. If we went to the A lender, then the client is, if this is a good client and it can go back to the A lender, they will receive the best rate up there. If there are clients who are who struggle with the credit, then they will not qualify with the A lender, and they will go to the bank that will give them a little higher rate, but they will get mortgage done.
Mortgage done.
Yes.
Right. Eva, thanks very much for coming again on today's show. You brought a lot of good information in regards to refinancing. Looking forward to seeing you again next month when we continue our discussion about everything mortgage related.
Thank you for having me.
If anybody has any more questions or would like more information on refinancing or mortgage financing, they can get in contact with Eva Zaba at Centum Wait to Save. I'm your host, Joe Terceira, and we'll see you next time.